background in business. He built a startup in Australia to 300 employees, a $315 million IPO, is that right? After relocating here to NOLA, he got started in real estate. He started NOLA Home Buyer, which he operates now. He is, in my opinion, a fantastic role model in both the real estate and the wholesaling space, both because he is successful at what he does, good at what he does, but also genuinely just a really good person. I'm really excited to have him here with us tonight. And then, like I mentioned, he runs the the West Bank Meetup with Emil. But so real quick, give a quick round of applause for Steve. So, is there anything I missed in the intro?
No, that covers it.
Yeah, all right. So, walk us through, you go from it was a tech company, right, in Australia?
Yes.
So, going from a tech IPO, bootstrapping a tech company in Australia to real estate in New Orleans, what was that like? How did you go from A to B?
Sort of by accident. So I left operational role in the company in 2018, and I wanted to take a year off. I'm a big Robert Keighery fan. He wrote the book Retire Young, Retire Rich, which when he exited his first business, he took a year off, and it was just a clear mind. Don't try to think about what you want to do. Just go find yourself. So that's what I was doing. Part of finding myself was we love America. We've been to like 24 states. We just love the place. New Orleans is one of my favorite cities. I was a Saints fan, but converted when we came here on a holiday. So the nucleus was we just wanted to come here, spend 6 months just vacationing. My daughter we enrolled her in school. We switched, so she was at school, and me and my wife just had fun. So I didn't know what I wanted to do next, but I did want to do more real estate. I had 6 rentals in Australia. I wasn't really a real estate person, but I believed in the asset class, so I wanted to do more real estate, and we decided we wanted to stay here, and I just examined what real estate was like. I bought a property as part of my visa. I'm on a business investment visa, so you need to invest money into the country and hire people, so I need to make an economic impact. So I bought a property to do that. I bought it from a wholesaler, and I'm like, okay, wholesalers, what's a wholesaler? I didn't know what that was. And they have the deals. Well, if they have the deals, I want the deals. So I want to be a good customer to them. So I want to learn what they do. And I went to a training on wholesaling. My intention was to be a customer. And then we've been at Jones Cox, and she went through, it was sales and marketing, and I ran the sales and marketing in my company. So when she just went through what wholesaling was, it's that's what I do. My skill set is perfectly matched, and that's why I went into wholesaling initially here.
How did you find out about that initial training that got you started?
Not really. So again, meetups like this, are really important. Me and Emil run the one on the West Bank, and it was the New Orleans Real Estate Investor Association. It was through them. Being at Cox Jones was a speaker at one of their events, and then she did a one-day workshop, which I did. So that's how I was introduced, and I did all her trainings. I went to Ohio, and she had advanced ones, and I did a lot of training. A lot of the nucleus of what I first learned was from her. And she's an OG, she's been through the cycle. She's not the person that's done 10 deals and has got a course, you know what I mean?
Not a guru, right?
Yeah.
What was it, I know you mentioned Keighery, right? Obviously he was a big part of that, but what was it that attracted you to real estate? What makes you believe so strongly in real estate?
Just assets. Keighery was an influence. I saw him speak in person in 2000 in Sydney, Australia, where I'm from. So I was at college at the time. So he heavily at the time I was studying university. I thought I was gonna, work with someone. That was my plan. And when he spoke about the cash flow quadrant, when he talked about assets and liabilities, that just just got me thinking, and I started with a business, but I've always wanted to do real estate because I wanted to be an investor in the I quadrant. If you're talking Keighery language, I want to have assets, so that was always my attraction, and I more and more love it just because of the debt. So it's an asset, it creates income, but the ability to raise money, borrow money, leverage, makes it a phenomenal investment in my opinion.
Talk about, as somebody who does both, the blend of business on one side versus real estate on the other, and if somebody's all in on one versus the other, what maybe would they miss out on, or the differences between the two?
So I think business is a fantastic way to build capital, build real wealth. Real estate doesn't have the upside of the business. We IPO'd a business for $315 million. We sold shares. I sold shares in a company that I never bought. Right, I never bought those shares. I created those shares, and those shares became very valuable. And it's hard to do that in real estate. So business can really give you a big kick up in wealth, but it's super risky, right? We executed amazingly. We did really well with our business, but I could have also done that and been there for nothing. Because you can get disrupted. You can be Kodak, right? And you've got this great business, and then all of a sudden, film, doesn't exist, and so it's risky. So I think a lot of people will build wealth through business, but most business people end up putting that money into real estate because it's safer, it's more stable, it's less likely to go to zero. You've got insurance and the like. So the upside isn't as high, but it's there, and it's safe.
That's one really cool thing about real estate too, is it kind of works for both sides of that spectrum, right? It works for the guy who built a successful business and needs a place to store his wealth and protect it, who has money. But I feel like it also works for the guy or girl who's brand new, starting out, has no money, and it's a vehicle maybe to build wealth from nothing. I feel like it's kind of unique in that sense.
Absolutely. I think real estate business can be a get rich quick scheme. It's not scheme, but you can get rich quicker, but there's more risk. Real estate, it's get rich slow, but you're much more likely to get there. You're probably not going to crash and burn if you stick with it. So as an everyday person can have a W-2 job, and they can start to acquire real estate, and over time that's going to grow, and they can get more, and they will end up being really wealthy. So I think that's the attraction of real estate.
Talk to us about, I remember, I forgot which meetup it was, but after the meetup, you talked about fast money, medium money, slow money. Talk us through that.
Yeah, and I stole that from Chris Rood. So Chris Rood talks about that, and it really hit me. Real estate and rentals particularly, I love rentals. Rentals is how you build wealth, but it's slow money, okay? So it doesn't do a lot for you today, right? You buy a rental, if you buy it all cash, it's going to give you cash flow now, but you have to put that cash into it. If you're leveraging, it's not doing a lot for you, but it's not doing a lot for you today. You're not going to live off that rental. Even if you buy 30 rentals, the leverage, it's still not going to feed you today, but it's going to make you really wealthy in the long run. It's slow money. Fast money is you need to pay the bill. You need money now. So fast money can be a W-2 job. You work, you get paid, and that's fast. Fast money can be wholesaling, like what I do. Fast money can be flipping. You do a flip, it's a quick flip, it's fast money. So you need that money to sustain you, and the slow money is building in the background. If you're relying on the slow money, it breaks though. If you're doing just slow money and expecting to live off it, it's really hard to make it work. So you need the fast money as well.
That's really good. I remember hearing you talk about that. Wow, it was one of those game-changing moments. Right, you do need different pots of money, because I know I got sucked into the trap of, you buy a couple rentals, all you need is, you get 4 or 5 rentals and you'll have all this cash flow and you can retire, but as we all know, it doesn't usually work out that way, right?
Yeah, rentals generally take time. And it depends how you do it. If you make a bunch of cash and you got all the cash in it, it'll make you cash flow today. But if you put a lot of money into it to make that happen. If it's leveraged, it's not doing a lot, but it's going to grow over time, absolutely.
So transitioning from, again, tech IPO to real estate, what were some of the biggest lessons or skills that you took from that experience in business to apply to real estate?
I applied it first to wholesaling, right? Because wholesaling isn't really investing. Okay, so when you're wholesaling, it's not investment. You're not an investor. Like you're doing sales and marketing. Wholesaling really marketing and sales function, right? So I had those skills I ran the sales and marketing in our company. So those were skills I understood. Our business was a two-sided marketplace. So just for reference for you guys, in America, our business was very similar to Angie's List, TaskRabbit, Home Advisor. Like we were connecting homeowners with contractors, and we were making that easy. So for me, wholesaling was the same thing. It's like you're connecting sellers with buyers. It's a two-sided marketplace. So I use my skills of sales and marketing and recognizing the business model of wholesaling. That's what got me into wholesaling. And then from the wholesaling, it taught me the market. So I learned so much from my buyers. So the first deal I did were wholesale. I didn't own anything myself. But after a while, I learned what was a good investment. Because I walked properties with really, really smart investors. I saw they were all different. They all had different approaches, right? So I saw the different approaches. I saw what they bought. I saw how they exited, and that taught me real estate. And then I decided I'm going to start buying myself. So I was very confident to make those purchases and do it because of the wholesaling.
And I think wholesaling's a unique niche of real estate because it seems to attract, I don't know, maybe it's the gurus or what, but it seems to be this sales pitch of, hey, you don't need any money, you don't need any skills, just come on in, you can do wholesaling and you'll make all this money, right? When clearly that's not the case. I think, if anything, it's the opposite. Like as a wholesaler, you almost need to be just as good, if not better, at everyone else's job as you are. You need to know what the investor's looking for. You need to be able to estimate rehab. You need to be able to pull comps. Like you need to be just as good as all those jobs as everybody else is, right?
Yeah, wholesaling does seem to attract all carriers, and it is the guru's fault because they'll tell you how easy it is, right? And it is easy, just like losing weight is easy, right? Like it's easy. I can tell everyone how to lose weight. I don't care, what size you are. It's easy. You consume less calories. You consume less calories than you burn. You go to the gym every day. You exercise. It's easy. But that's hard to do, right? Having that dedication, that motivation. So wholesaling is the same thing. It's like you market, you speak to motivated sellers, you get a contract, you assign it. It's easy. But it's hard to do, it's hard to execute, it takes commitment, consistency, drive. So I think the gurus sell that shiny object, but it's actually hard. And I think the problem with wholesalers in general is they do it as a hustle. There's all this hustle culture on, I got this side hustle, I'm trying to make some money. And I don't want to knock that because I'm glad people have hustle. But, I think to be successful, you need to approach it as a business. Because to me, wholesaling is a business, right? I'm approaching it systematically. I'm trying to build a brand, with my buyers. I'm trying to build a brand with my sellers. I'm trying to do things right. I'm trying to do it in a way that's not trying to make a buck today on this one deal. I'm trying to have a system that's going to make money over time and add value to people over time. So I think that's the disconnect.
Yeah, a big part of that is they get sold on, like you said, right? Like get rich quick. Hey, you do wholesaling 6 months from now, you're gonna be making 6 figures or whatever that is. When in reality, like you said, building a business, it takes time, it takes consistency, it takes doing the things you need to do to build any successful business.
And they say it doesn't take money, and technically it doesn't take money to assign a contract, right? You don't need to buy it, you need to market. So you need to spend money on marketing, or if you're not spending money, you need to spend a lot of time calling, driving and stuff. So it does cost money. If you've got no money, it's pretty hard to wholesale.
And in addition to those things you talked about, consistency and sticking with it, what are some of the things that separates the good wholesalers, the successful ones, from those that maybe don't cut it?
I mean, I think the business mindset, long-term mindset, people are too short-term greedy, trying to just make this home run on the first deal and just, so I think that's a problem. And I think the main problem is underwriting. So it's like they're sold this shiny object that's cool, like it make money, but if you don't know what the after repair value of a property is, if you can't estimate a rehab and know what a deal is, it's pretty hard to do it. And I think that's where a lot of people struggle. They come and they're trying to get a contract, but they don't know what they need to get it for. And that, I think, is what stops a lot of people. They'll get a contract because the seller wanted this price, right? And they get the seller whatever their price, the lowest they can get them, and they go, cool, I'll get that contract. But if it's the wrong price, they then waste a lot of time trying to sell it. And their energy, they're worried, because they told the seller they're going to move it, and it's not priced right. And then, if they're working really hard to try to move it, well, they're actually just annoying the buyers, because they've got a deal that's not a deal, and they're trying to push it down the throat of the buyer. So I think that's just a fundamental error. You need to know your number, you need to get the right price. If that doesn't happen, then nothing else is going to work, regardless of how good you are.
Yeah, and it's the same thing on the realtor side, right? Where doing the work up front, knowing the numbers, and when a seller says, hey, I want to list my house for $500,000 when it's a $350,000 home, like sometimes people say, yeah, sure, hey, let's throw it up, but we're kind of wasting everybody's time instead of having the hard conversation to say, look, here's what the numbers say, and you're not wasting their time, your time, the buyer's time, all that.
I think the hard conversation is the right word, and that's like I'll speak to a lot of wholesalers who are starting out, it's like they'll tell me why it has to be this number, because they'll get sold by the seller, like why that number is their number, and that can be fine, but if it's not the number that's going to move, it doesn't matter if there's a reason behind it. So I think you need to have that hard conversation with the seller. We will never tell a seller what the house is worth and what price they need to sell it for, because the seller, they can set the price. If you own the property, you get to decide whether you sell it or not. You can name your price. You can do whatever you want. I'm not going to tell you it can't be that price. Doesn't mean it's going to sell it, right? if you got this price that's unrealistic, you can name it and you can say that's your number, but you're never going to sell it.
Obviously, you're doing a lot of wholesaling. What else in terms of real estate are you doing or working on, or what else is happening?
So I did a lot of birds. I've been doing less birds currently, but I did a lot of birds in 2021. Slowed down in 22 as the interest rates were turning, which was not a bad decision. But I love the bird. I think the bird method's the best method around in terms of being able to buy a property. If you can cash out all your money and it's still cash flow, or even just cover its costs. If it cash flows a little bit, you get an infinite cash on cash return, right? Because if you have no money in the deal and you still own the asset and it's making some money and it's amortizing and it's appreciating, that's a really good deal. So I love the bird.
What is the bird?
Obviously buy a property, renovate it, rent it out, refinance. So refinance your money and then repeat is the acronym. So to slow it down a little bit, you're going to buy a property at a discounted price. That needs repairs, you fix it up, but instead of a flipper would normally buy, they renovate and they sell, right? But with a bird, you're going to buy, you're going to renovate. Instead of selling, you put a tenant in place, and then you get a refinance. You can generally get a DCSR loan for 75% of the after repair value. So if you buy right, 75% after repair value, you get all your money back, and then now you've got the asset. You still got that equity. You could always turn around and sell it like Clipper, but if you can hold that into the future, it's going to be worth more, and that's the real benefit of it.
Yeah, you kind of have your cake and eat it too, in a sense, right?
Absolutely.
When I interviewed Richie Lewis, he kind of talked about, we kind of unintentionally went down this road of tough times, right? And it's a question I want to start bringing up in these interviews, because I think whether it's here or social media, I think we see the highlight reels. We see the mountaintops. We see Aussie Steve's got a successful wholesaling business. He's an investor. He's doing great. But we all know, whether it's personal or from successful people that we know, that's not what the road looked like, right? It's not you get up on top and you stay on top and it's just this smooth interstate, right? There's valleys and there's bad situations and things that happen, tough times paying the bills. And so I'd like to extract a little bit of that if you're comfortable with it, but figure out like, maybe encourage somebody in the room who's not on a mountaintop, who's in a valley and says, well, Steve's just different, right? Also, Steve's just a different guy. He's got it and I don't. But I'm sure there were times where it didn't feel like you were on top, where things weren't going well. And I'll be transparent with mine before I ask you to do yours. You know, we moved back in 2015, and so I was married and I don't know exactly how old, but almost 30, living with my parents. My dad's in the back, so they allowed us to live with them for like a full year. So if you took that snapshot, like, what's this guy doing? And nothing against living with your parents, right? But then fast forward to 2 years later, we had like, I think 8 doors and $500,000 in real estate, and we were doing flips, and I had my real estate license and all these things. And like, a lot of times people don't talk about living with their parents. They don't talk about the times when they had a hard time paying the bills, or when they had to pull their kids out of private school, or whatever it is. But would you mind sharing any of those experiences where things maybe weren't as great?
For sure, I've had heaps. So I mean, I'm a positive guy, so like I'm always positive about things. But man, we have plenty of dark moments and bad times. You know, I like that meme. People say like I've failed more times than some people would try. You know what I mean? And like that's what it takes. So you know, if I think back early, so something people I remember. It would have been like 2006, maybe 2005, 2006. Our business was starting up, like we're doing okay, but I was working really hard, and I was about to get married, and it was just a lot of pressure. And then before we got married, like we took a break, like just before we got married, I lived with my dad for like a week, just to make sure. And I was like, man, what am I doing? I'm working so hard, I'm like damaging my relationship, and I was gonna quit my business. And so I'm like, I met my business partner, and I'm like, I'm out. And he convinced me like not to give up at that time, you know, because it was hard. I was working super long hours. We weren't really getting the financial results. We were in setup mode, and he convinced me to stay. And I look back at that and just think, man, imagine I did that. Like I couldn't even imagine my life before was just completely different. So that was pivotal to me in that startup stage. Like, don't give up. Like, results don't often come fast. Even wholesaling, like it took me 6 months to get my first wholesale deal. 6 months, and I was working like hardcore, like full time. I was working hard, and it took a long time. But I did my first, second, and third in the same week. Right, and it wasn't that I did everything right that week. I finally figured it out. It was all the effort compounding from that first 6 months of trying. So there's that element of don't giving up. I can think of many times throughout. You know, I've been down to zero a couple times. Like, I was never afraid to go to zero. Like, I've been really close. I pushed it, right? Because our business was a real high growth business. You know, we didn't take a lot of money out of it. In the early days, we didn't really have much of a salary. We were paying our staff more than us. And, you know, I've been right down to that zero, and every time I got really close to zero, like something happened. And, you know, my wife has we have a saying, right? She won't like this. She doesn't like when she hears this, but it's light the candles. It's like light the candles was like save the money, don't spend money, like don't turn the lights on, we're lighting candles. We weren't actually lighting candles, but it was metaphorical. So we've been through some light the candle stages, you know, and it's like that when you're doing a business. Like, you need to invest in, you need to give it time to come back. So you need to, you know, so I've launched things that haven't worked. I've had to close down divisions, I've had to fire people. I've heaps of hiccups along the way. So, you know, you just got to push through them.
And I think it's important to note those times, right? Because if you look from a geography perspective, nothing grows on top of a mountain, right? If you go on top of Pikes Peak in Colorado, it's just dirt, right? But the valley is the most fertile, right? That's where all the growth and all the development and all that stuff happens. So I appreciate you sharing that. You also talked about those first 6 months, and it reminds me a lot of James Clear's concept of the hockey stick, right? You're working that latent potential, you're building and building and building, nothing's happening, and then all of a sudden you hit that chart and things, that built up stored potential starts to kind of kick in.
The hockey curve is real, but there's another element on top of that, and that's the S curve. You know the S curve?
What is that?
So the S curve is the continuation of the hockey stick, and I've been through the S curve a couple of times, and it's like, because you start here, it's hard, and then you get that trajectory and you start going up, but the S curve is it starts to go like that. And the things you did in the past aren't contributing to growth in the same way, you need to change it. And I can think in our business, like we've changed our model many times where we felt like we got all this growth, but now it's getting harder. Like you're spending more effort and getting less return. And in those times, you need to be prepared to change it up. My business partner had this analogy. It's like you're going up that peak, and you got this backpack. There's all these things you do, but like what you don't realize is you actually got to look at your backpack and throw a bunch of crap away because it's heavy, it's weighing you down. So you need to make those decisions in a business to pivot and change, and you got to recognize when you. So first you want to get that hockey stick. But then you need to realize when you need to, because the S curve is you flatten and then you come up and you go to the next one.
I like that a lot. So that's actually a really good pivot or a good segue to the last 18 or so months has been very difficult for most people in real estate. What have you changed, pivoted, or overcoming that S curve? What are some of the things that y'all have adapted in your business?
So yeah, it's definitely hard, right? We'll step over here. So a couple of things adjusted. So I do remember, maybe it was 2 years ago, 18 months ago, there was a time when we were doing really good with the wholesale, we were buying the burrs, and it's funny, some other wholesalers said to me, "You having trouble moving deals?" I'm like, "No, what are you talking about, moving deals?" Two of them, and then another one said, "What are you talking about?" These are actually pretty good wholesalers. And then like the next week I had 3 deals I sent out, and like normally I get a lot of response, and it was like, it's crickets. I'm like, okay. And that was when the market shifted, and there was a time when it just like really, everyone just like sort of froze, they didn't know what was going on. So we just adjusted our prices straight away, because we were trying to calculate 70% of the after repair value minus repairs would be the price we're trying to price our wholesale contracts up to, and we just went 65%. We're like underwriting 65%, like I don't care if the sellers don't want it, like that's the price now. Like they don't have they're feeling the same thing we're feeling, they don't have other options. So we did that, and that was like, and we started moving deals again. Then, probably the other pivot, I like to be contrarian. I think, entrepreneurs want to be contrarian, and the market has been tough, and I'll lean into it. And I spoke about it at the West Bank Meetup end of year thing, because it was getting tougher. Disposition for a wholesaler, like the market shifted. I mentioned the two-sided marketplace, right? You have sellers and you have buyers. And as a wholesaler, your job is to make life easy for the sellers and make life easy for the buyers. You sit in the middle, you earn your fee there. The thing was, the sellers were the most valuable thing, right, in 2020, 21, because it was really hard to find deals. So if you had a contract, like that contract flew off the shelf. And I think a lot of wholesalers got used to it, and they weren't looking after their buyers. And I think what happened is a bunch of the newer buyers disappeared. The less experienced people who were like, they disappeared. So there was less buyers, so it was harder to move the deals. But I'm like, okay, it's getting harder. That actually excites me. So I'm going to lean into that. I'm going to build the buyer side. So I hired John for dispositions. It's harder. So like I can't just send an email and sell the deal. I need to like get on the phone, speak to people, build relationships, you know, so that's definitely been the pivot, and that's been working really well for us. So, because the market's hard, like it's not easy now. Like we're doing deals and we're doing well, but it's not easy, like we're working hard. So that's a pivot right now. At some point, I think, like, man, there's a lot of pent-up demand out there. At some point, the market will shift, and it's going to be nice. But that could be a year away, that could be 2 years away, it could be 6 months away. But at some point, when the rates drop, like, we went from like 6 million national like sales to like 4 million. Like, there's a lot of demand that's been gone the last couple of years. So, you know, I think it'll shift. You got to survive. You got to survive during that time and wait for that shift.
So I can sense you reaching into your pocket and pulling that crystal ball out. I want to get to that in a second, but I want to touch on something that kind of between the letters of what you were saying. I think a big part of your success in that transition is that treating the other side that you don't necessarily need to treat well, treating them well in those times. So in 2020, 21, early 22, when buyers are beating down the door for your contracts, you're still treating people right. So that way when it flips, those buyers aren't like, oh, now you want to come talk to me, Steve, right? Like, because you're treating them right the whole way. And same, I'm sure today you're treating sellers right? Even though, hey, like, sellers are maybe a dime a dozen, right? Everybody's trying to sell their houses, but it's harder to find buyers. You're still treating those sellers right, so when it does flip, you still have that relationship.
Both sides are always important, but they tend to shift. Because in two-sided marketplace, both sides, but the power shifts, but you always need both. It's just the balance changes. And yeah, you're right. I left a lot of money on the table with my wholesale deals in those good times, right? Like, I always valued working with good buyers who were like the cash, easy to close. Like, I think a lot of wholesalers got greedy, like, because the good buyers in 2021, like, it was harder to find deals for them because all the like less experienced people who were chasing the boom, like, they would pay more, right? And they would, so the wholesalers would like burn all the good buyers and get that top dollar. I never did that, so I left money on the table. But when it shifted, all the good buyers like me, like, I've always looked after them. So and they're the buyers that are still around now. So, you know, and you should always look after both sides, and that's the business approach. Like, you need to have a strong brand. On the sell side, I've bought houses that I didn't want to buy because I told the seller we're going to buy it, and I had a contract, and my buyers pulled out and I couldn't sell it. I bought properties just because, again, long term, that's my brand, right? I have a strong brand with sellers because I look after them. So I think you need to have that approach if you want to be sustainable and go through the cycles, and that's really important.
And I think it's true for everything. I know, like, even for us on the property management side, a lot of times tenants can be looked at or treated as a commodity, or like, hey, stop complaining, whatever, man. But like, for us, we try to treat everybody right, and we've converted tenants to buyers, right? Like, we've had those relationships build and grow, and it's been a different arm of the business because we take the same approach of, we're not just like, yeah, it's plenty of tenants around, whatever, man, if you don't like it, move it, right?
But for sure, it's actually funny because, like, I bought a lot of properties in my day, but like, I only bought my first house to live in 22. So I rented my whole life. So like, I respect renters. Like, I can relate. So I think you need to look after. I'm actually surprised that when I first came here, that wholesaler, I bought a property in Lafayette. So the first properties I went to look at, they were like Section 8 properties in Lafayette. And holy hell, man. As an Australian Sydney person, like, walking, like, they didn't even know they were coming for inspections, and like, man, the houses I saw were crazy. But you should look after everyone always. Like, that's just long-term, long-term business.
Yeah, and that's what I like about the culture of at least this segment of real estate. Like, this group, the West Bank, Maria, the North Shore, right? Like, I kind of feel like we all have that same heart of like, look, we're looking to solve problems for people. We're looking, that's Courtney's ethos, right? Like, we're looking to solve problems for people, and if we make money in the process, that's great too.
I think, yeah, I really like, that's like a lot of real estate people, not all real estate people like that, but I tend to attract those people. I tend to be the world, it's like, you sort of attract what you are, and I think these rooms, like most real estate people, they want to be wealthy, but it's not about like a suit and a fancy car, and I mean, it's stuff like that, but that's not really my circle. It's more about freedom, you know, choice, like, and I like that about real estate people, you know, and I love the people that are, you know, they look like everyday people, they're driving a beat up car, but like, you find out they're actually really rich. Like, those are people I like, you know, driving a Lambo, I don't care. I'm not materialistic. I'm materialistic about a house, because you live there, like, so I like a nice house. For myself, that's the only thing I'm materialistic about. Everything else, it doesn't matter.
And you mentioned you were renting while doing all the investing. How many rentals and all did you have by the time you actually bought? That's interesting.
Probably 30 rentals. And I mean, there's some math in that too. So it's just understanding where I live in Sydney, Australia. It's the second least affordable city in the world based on income to value. So the median house price where I live is $4 million, right? But the rent relative to that price, the yield, is actually really low, obviously, right? You're not renting out a $4 million house for a lot relative to the price. So it made financial sense for me to rent where I live because I could get a nice house at a lower price. But rent money is dead money, right? So I bought rentals in other areas. So, you know, I ended up buying 6 rentals in Australia, and then if they weren't in Sydney, run along, right? Because, man, the people, if you got a rental property, you are losing money every single month, like hand over fist. They get appreciation, it's just a different market. So, you know, so for me it was more financial, so that's why like I always rented. And also in Australia, you can't claim a mortgage deduction for a personal residence, it's taxed, you know, it's a tax, but all my rental properties are taxed. You know, obviously the interest is tax deductible, so that's why I always rented. It made a lot of sense. And my wife wanted a really nice house, so if I ever bought her, I had to wait to buy her house. Because I would have been broke. Because I'm a Robert Kiyosaki fan. Your house is a liability, so I waited to buy that liability.
That's amazing. So let's go back to your crystal ball. What do you see moving forward in the market? And feel free to take whatever creative liberties you want with that question, answer it however you see fit. But what do we have in store for us in the next 12-ish months?
So, you know, I mean, I love economics. Like, I studied economics at university. I geek out. I read a lot. I read everyone. Like, I love that stuff. But the best way to think, I believe, is in probabilities. I think anyone's like, hey, this is what's going to happen. Like that's nothing is certain. So for me, it's always like, what is the highest probability? That might be your base case. But you need to anticipate the reverse happening, you know. So I think everyone has thought that, I thought that interest rates would be down by now, right? I really thought this would be a much stronger year for sales volume in real estate. Because in my opinion, real estate's been in recession for a couple of years, okay? And that recession is measured by sales volume. I mean, there's realtors in the room, there's, you know, anyone that's like property inspector, you know, title companies, like, you're in a recession because it's transactions. The prices stay really firm, but the transactions are down, and that's how you make your money. So we've been in that recession. I really thought the interest rates would have come down, and that, you know, those transaction volumes would come back up, and that hasn't been the case. I personally, and now I think a lot of the economists are thinking that the interest rates aren't going to come down this year. I do personally believe they are. My belief has always been that for real estate to get out of a recession, we need the economy to get in a recession. And the problem for real estate, because real estate is so interest rate sensitive, and because the economy is hot, inflation is high, they put the rates up, which is put the brakes on real estate. So what we need as real estate people is we actually need the economy to be in a recession. We need unemployment to rise. We need those things to happen, which is sad because if that happens to you, that sucks. But as an economy, when that happens, the Fed will reduce interest rates, and I think property will come out of a recession when the economy goes into a recession. So it's actually sort of good for us, and I think that's happening personally. I believe that a lot of the data on employment is soft. It's not captured in the official numbers because they're very forecasted and modeled, so they always miss the turns. So I think we're there. I think unemployment is definitely rising. I think the economy is slowing. And from a real estate perspective, I think that's good, because that will mean that the Fed will drop rates. I still think it will happen this year, but there's a probability it may not. It may not. But I think within the next year it's going to happen. I think it's just been too long. And when that happens, there's a lot of pent up demand, right? There will be a lot of pain. So don't say that. When that happens, people will lose jobs. That's going to be hard on them. Their micro economy is going to be in trouble, and there will be more foreclosures. There'll be more opportunities to buy, more distress. But I think market-wise, when those rates come down, there's a lot of buyers that haven't moved, that want to move, that are sitting on their low rate. And when those rates come down, and those 2 million sales that we missed the last couple of years, or 6 million versus 4 million, there's pent-up demand. So I think real estate will start to pick up. Prices, who knows? I don't know necessarily prices are gonna skyrocket, but I just think volumes and activity and all that stuff is gonna come up, which will be good for the majority of us in this room.
Yeah, and I agree. There's certainly pain. I think the data, so the quantitative data, doesn't necessarily show it fully yet, but qualitative in terms of having conversations, talking to tenants, talking to people, talking to buyers and sellers. Everybody's feeling it. It seems like everybody's feeling the pain of this recession that I guess they just refuse to use the R word, recession, right? It's an election year. We're not going to talk about recession, so it's not a recession. But it definitely feels like it, so I agree.
And I feel bad because it's I think the recession is good for most people in real estate. As long as you keep your job, you've got a job, and there's those factors. But it's actually good for us. Real estate is first in a recession, but it's first out. And again, it's just because it's so interest rate sensitive. Interest rates are such a pivotal part to real estate, and the recession will cause those rates to come down. If insurance could come down, I don't have a crystal ball on that, I have no idea, but God, I wish insurance would come down.
Yeah, absolutely. So as we start to land the plane, I want to give a couple minutes for questions, but I would regret very much if I had a conversation with you, somebody that I think is an expert in this, and didn't ask about finding deals. It would be something that I would look back on and regret. So what's working today? Are you still able to find deals? I know we kind of talked about it's a little bit easier now maybe than it was 2 years ago, but in terms of other than signing up for y'all's email list, if I wanted to find deals today, what's working?
I'll tell you what's working. I mean, everything works if you do. So I don't think that everyone's looking for the magic marketing channel, and I think they all work. I think if you're someone's out looking direct for deals and want to market direct to owner, I think you want to pick the thing that's right for you and get good at it. You don't need to do all of it. You need to pick one thing, double down on it, and get good at it. There's deals on the MLS right now too, so don't even overlook there are deals on the MLS because people are struggling to sell. For me personally, I do a lot of online marketing, okay? So my background is online, that we're a tech company, so I'm very, very familiar with online marketing. So we do a lot of PPC, Google AdWords, Facebook, YouTube. We do a lot of branding. So I get a lot of referrals now. A lot of joint ventures come to me, as well. So for me, it's really digital brand is really working. But I don't think that's what works. In inverted commas, because I think banner signs still work, cold still works, texting's become a little bit less, but I did a lot of texting when I started. Texting was really good for me. I just stopped because online's more my thing.
I like what you said there. What was the quote again? It works if you work or something.
Everything works if you do. I think that's Adam Johnson's, right? I don't know, but yeah, everything works if you do. I think also, let me add on that too. So because everyone's what's the marketing channel? Text, direct mail, and that's a factor, but it's not a marketing channel. It's you got to go deeper than that, right? How are you speaking to sellers? If you do some marketing that gets a phone ringing, or if you get a seller on the phone, if you get face to face with a seller, it's not, the marketing doesn't get you a deal. You create a deal. Marketing gets you an opportunity, interaction, a lead. How do you speak to them? How do you interview them? How do you find out about the condition of the property? Are you ensuring confidence? Are you taking them to a point where you're figuring out what their real problem is? Are you figuring out what the thing is that solves their problem, because it may not be price, it may be something else, or you know, so it's not a marketing channel isn't a silver bullet. It's important, but it's like one component. And if you're going to do deals in volume, if you're only doing a couple deals, we've got doing a couple of deals a year, get on the wholesalers. It's not just out, everyone. Get a good realtor on the MLS. Like, probably don't need to do it. But if you're trying to do volume, or if you're doing wholesaling, like, it's the whole system that matters.